Alright, let's break down Vestas wind system today. This company, they're a manufacturer of wind turbines for electricity production. They're doing this globally. We will take a look at the key aspects of the business and really give you a ground understanding of what you're looking to potentially invest in if you're doing research on this stock. This stock was down a lot in 2011, 2012. There was a lot of fears with the Chinese players entering the market. This is still being talked about today. Let's just go over the investor presentation and drill down on some of the highlights and lowlights in the business and a little bit what to expect going forward into the future. So I spent some time today just listening to the full Q&A, the full presentation of the first quarter of this year, and I will just make a quick recap for you guys because that's how I think I can provide the most value in this video. In terms of talking about the global environment, this was very similar to other quarterly earnings and investor presentations. Talking about the geopolitical volatility, talking about the macro headwinds basically, with inflation and interest rates being one of those. And then some of the things that were good for the business was obviously the lower costs of commodities and transport costs going down as well, as we have seen cost of shipping go down recently among other means of transportation, although recently they have started to rise again. So this is obviously towards the end of Q2 that I'm making this video, but we have seen this rise a bit again. In terms of the market environment here, we see grid investment prioritized in key markets. So we're seeing big infrastructure investments, and this type of electricity production, it can flip like a switch. All of a sudden there's a new political party elected in some country, in some key market, and they start to do a bunch of legislation, they start to put budget, and all of a sudden you get big orders. So it's quite volatile as well. It's a plus and it's a minus. It can go the other way around. So here we can see permitting improvement in some markets of Germany and UK, but overall permitting auctions and grid still challenging. So as you see, it's a plus, it's a minus. All of a sudden there's a big war in Eastern Europe and we need to focus more on energy, and then it's forgotten again. So it comes and goes. And then we're also seeing the project level supply chain disruption improving. This was a big talk for a lot of businesses. After the COVID-19 thing, this was talked about. And then we also saw that the business took on some low margin projects. They talked a bit more about this in the Q&A. But this is only natural. When interest rates are low, it's profitable to take on low margin projects. And you can do some calculation out into the future. You have this cost of capital now that's low, and you don't have that much margin in the project, but it makes sense anyway because interest rates are low. And now all of a sudden we're in a different environment with higher interest rates, and then the cost of capital increases, and all of a sudden it's not as good for business anymore. We're seeing this a lot with developers as well, so we're seeing it in other verticals. It's not only Vestas wind systems. We're seeing talk about market share as well, and important here, excluding China. They're not talking about all these cheap Chinese domestic producers that are very strong in the segment, but there are a bunch of other non-Chinese players as well, and of those, well, then Vestas is the biggest one. We're seeing the industry maturing. That means lower growth, as we will see in the financial numbers. Let's see. Before we go into numbers, we also see services, talking about backlog in this case, quite a lot of backlog. So projects that needs to be finished. This also affects the income that comes. So they have some projects, for example, that didn't finish a lot in Q1, and a lot of the questions that came from the Wall Street analysts was regarding Alright, but do you think this project that slipped in Q1 is gonna be done in Q2? Well, since they didn't change guidance that much, it means that, alright, they believe it's gonna finish, but later in the year, and we didn't get any concrete information regarding that. Why does it matter with backlog? Well, in generally accepted accounting principles, you can't bring up revenue onto the income statement until you have delivered on the project. It's like if you buy a plane ticket, that's not revenue yet, but once you've flown on the plane, well, then it's accepted revenue. So same for these larger projects. I hope that makes a lot of sense. In terms of pipeline, I wouldn't take this too into heart. This is very unsecure. This is early stage, not closed yet, but good to know nonetheless. Sustainability they talked a little about as well with the CO2 offset. I'm not going to spend a lot of time on this slide. You can pause and read if you want. Income statement. Excellent. So we're seeing a decline in revenue, and this is quarter on quarter. So historically, the first quarter has been weak for Vestas. Will it continue to be like that in the future? Who knows? If you're watching this in the future, well, just know that, alright, the first quarter has historically been weak for the company. We also seen an increase in gross profit, even though revenue declined. So more focus on profitability, less focus on growth. This was something that they talked about in the earnings call as well, more focus on the profitability side. And in terms of that, we need to be more careful with the valuation going forward as well, looking at what the forward price to earnings ratio is and not price it too high. Although this is, of course, an industry of the future that has a lot of hype in it. It would be interesting to also look, if I were to do more research on this company, I would look at institutional ownership as well, and I can theorize now that a lot of climate funds will be invested if it's a super high number percentage-wise of the floats that's owned by institution. Well, then there's not a lot of growth on the demand side potentially that we see from small cap stocks with low ownership. All of a sudden they get the seal of approval from Wall Street and stock price increase a lot. So that's worth doing research on if you're considering investing in this company. And of course, earnings per share divided out, we see slightly negative numbers in this case. Neatly summarized until 0.0, but negative 0.0 something was the result. So it was in the negative. Speaking of services, they talked a bunch about it, but I'm not going to talk on that slide. Net working capital, also very important when you look at the cash flow statement in this report. Net working capital will be something that affects cash flow from operations. You have a lot of cash being tied up in production of wind turbines, and the level that this increase or decrease will affect the cash flow statement. So keep that in mind in the future when you're doing research on the cash flow statement for this company. And of course, it's CapEx heavy. So when you look at the balance sheet, well, they're gonna do a lot of investing. They're doing both offshore and onshore wind turbine projects, developing fields. Let's see if we have any more interesting slides. Capital structure, obviously cost of capital, net debt to EBITDA before special items. They do this special items. That's not GAAP acceptable, so keep that in mind. Everybody's gonna do some sort of variation to the numbers. If you look at, for example, Cathy Wood, she likes to remove R&D from her calculations. That's not a cost really, because they're investing in the future. So you can do all kinds of financial engineering. And when they talk about capital structure, they remove special items. But I think that it's important to look with special items as well, because this is the industry. We're going to have vastly different orders, and there's going to be a bunch of special items as well. And moving on to the Q&A, we saw a bunch of questions regarding these low margin projects. That was something that Wall Street was very curious about. Also guidance going forward for the industry specific regions. We did not get a good response to the Australia region, but I think we're going to see that in the next quarterly earnings on a good breakdown. But they also spoke a bunch about these low margin projects and being able to finish them up and having them out of the backlog, so to say. And why do I talk about this specifically in the Q&A part? Well, because if you're looking now and you're looking at earnings per share, you can see that they're quite low, and this could be a potential bullish event for Vestas wind system to have these low margin projects finished to be able to deliver on higher margin products instead. And then we're gonna see greater numbers, there's gonna be greater valuation on the company as well. So that's important to look at for investors. As regarding a timeline on this, we did not get a clear answer from management, so we have to make our own theory as investors as to when these projects will be phased out of the pipeline. And that's the interesting part, theorizing, speculating, that's what's making the market basically. Alright, that's been it for this video, doing some introductory research on Vestas wind system for you guys. And as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.